How's it going, everybody? It's Stas here. So we got to talk. The stock market took a very big hit over the past couple of, well, it's really been the past hour or two, and now it's rebounded quite a bit. And this is because of the Federal Reserve. Their meeting concluded today, and we got the statement. We got news on inflation, GDP, what they're doing in terms of tapering. Are they tapering? Are they not? Interest rates, all this good stuff. So we're going to break it down today. Sit back, relax, take a sip of your good old water, go down below, get yourself 2 stocks from Webull. They're free. All you have to do is deposit $100, get your 2 free stocks. They're valued up to $1,600. And if you don't like Webull, you can take out the $100 you deposited, and that is why they are literally free stocks. They're linked right down below. And let's get right into the video. So like I said, the markets are extremely volatile right now, and we've predicted this over the past couple of days, and we got the news. That, and we also predicted this, that the Fed, they're not looking to do anything as of now with the federal funds rate. They're keeping it in the target range of 0 to 0.25%, and they expect it will be appropriate to maintain this target range until the labor market conditions have reached levels consistent with the committee's assessments of maximum employment, and inflation has risen to 2% and is back on track to moderately exceed 2% for some time, which, I mean, we're pretty much above 2% now, but I get what they're saying when it comes to that. And the Federal Reserve will continue to increase its holdings of Treasury securities by at least $80 billion per month, and agency mortgage-backed securities by at least $40 billion per month until substantial further progress has been made towards the committee's maximum employment and price stability goals. And we also called this out yesterday. I mean, it didn't take a genius to realize that they weren't going to do much in terms of tapering back on the asset purchases and, keeping the interest rates the same. I mean, we obviously, most of us at least, we knew that this was going to be the case. And these asset purchases, and this comes straight from their statement, by the way, guys, go check it out. Type in Federal Reserve statement, and there's a big PDF of about 20 pages that goes through a bunch of charts talking about GDP, inflation, the federal funds rate, and so forth, forecasts. Go check that out. I'll actually link it down below for you guys to make it easier. And these asset purchases, they help foster smooth market functioning and accommodative financial conditions, thereby supporting the flow of credit to household and businesses. And look, I mean, the SPY ETF here, which tracks the S&P 500, went from 423, and this was at 2 p.m., right? And that statement was released at 2 p.m., and it dumped very aggressively to 419.90. In other words, it lost about 0.8%. And you guys can see we didn't get much under 419.90. We double bottomed there, and we actually rebounded up until now. We rebounded from 420 roughly to about 423.50, and now the market's about to close in 5 minutes, and it's trading at $422.36, currently down 0.5% on the day. And the reason why the markets did dump initially, and if we look at QQQ, you guys can see a lot of the same. This tracks the NASDAQ 100. If I pull up the Dow Jones, you can see it dumped as well. The Dow's currently down about 0.7%. The NASDAQ 100 is down 0.3%. The Russell is down. What's the Russell down? 0.1% right now. So you guys can see, again, the big drop in the pop. And the reason why we got that initial drop is because the Fed moved up the forecast for initial rate hikes to 2023 with the stronger inflation that we've been seeing. And currently, the range, and you can see this all on the PDF link down below, like I said, the range for 2022 in terms of the federal funds rate is between 0.1 to 0.6%. That is the range as of now. The range for 2023, which indicates, I believe, 2 rate hikes in that year. Right now, it's looking at 0.1% on the lower end for 2023. to about 1.6% on the higher end. And if you guys didn't know, I'm sure most of you do know at this point, but as the Fed increases the interest rates, this is not good for the stock market. I mean, a lot of people are like, oh, the markets are in a bubble, which they very well could be because of the Federal Reserve and because of the 0% interest rates. And, that's been causing the markets to go up. And as they increase the rates, this will cause the markets to come down a bit, especially if they taper when they end up tapering these asset purchases. And the Fed officials now see its benchmark short-term rate at a range of 0.5% to 0.75% in 2023. And like I said, they indicate that's indicating they prefer 2 rate hikes in that year. And while most of the officials said they want to hold the rate near zero through next year, 2022 into 2023, only 5 of them foresee rates at that level in 2023. 2 prefer 1 rate increase in 2023, while 3 of them envision 2 hikes and 8 foresee an even higher rate by then. So a lot of the people on the board here, whatever you want to call it, they're seeing higher rates in 2023. So this kind of freaked out the market, like we saw that initial drop once that report ended up coming out. And we got some, word on inflation. We got 2 to 2.3%. That is what Jerome Powell is looking at for 2023, consistent with the goals. That is kind of what is being said right now. And who knows? I mean, at the end of the day, guys, none of these forecasts are definite. We don't know what's going to happen, but this is just, as of now, what the Federal Reserve is looking at. And have they been wrong in the past? Absolutely. I mean, come on. Everybody out there has been wrong one time or another, right? So yeah, inflation, it's heating up right now for sure, and they're still sticking to the fact that it's just transitory, which I'm not completely buying. I mean, you guys know I've been on the channel stating that before, and I'm going to continue stating that because that's what I truly believe. I don't think it's necessarily transitory, and I believe they're just saying that not to freak everybody out, because imagine, I mentioned this a couple videos ago, imagine if Powell came on air and he's like, yep, inflation, it's not transitory, guys. It's here to stay. Get ready. What if he said that? That would freak out the markets. It would be just a complete disaster. So, yeah, keep that in mind. And with these meetings, you always have to read between the lines. That is super important. And a lot of questions we're trying to get Powell, like you guys know, they're doing a lot of, or at the end of the meeting, they do Q&A. Some of the questions we're trying to get Powell to spill the beans on, hey pal, when are you guys looking to taper? And he kept saying, oh, we got to look at more data. Oh, we have no timeline for this right now. And yeah, that's pretty much what he's saying, because if he gives a timeline on tapering, that could freak out the markets, because let's say he says, oh, we're going to taper in a year from now. That might be sooner than what the markets were expecting. Then boom, market's done. Or if he says, oh, we're not going to taper until hypothetically 5 years from now, the markets would probably rip on that news and go up like crazy. And a funny thing that he said he was going to be super transparent. And the quote here was, orderly, methodical, and transparent in tapering. And I just laughed at that. And I'm like, oh man, the irony in that statement. The Federal Reserve being transparent. Yeah, okay. Like they're being transparent right now. I'm more of I'm not a complete, I don't know. I don't know how to say this. I'm kind of more of a contrarian, right? I'm not going along with everybody. I'm not. And there goes the markets right there, guys, closing. Let's see what SPY closed down, 0.5%. NASDAQ down about, 0.3%. Dow down 0.8%. And back to what I was saying, I'm not one of these guys that doesn't question anything and just goes along with whatever's being told to me. No, I mean, you got to question everything, and you got to go against the grain a little bit. And I just just laughed when he said that because the Fed, I mean, I would argue they're the least transparent, or maybe not the least transparent, but they're not the most transparent. Let's just put it that way, guys. So overall, that is it. I mean, I just wanted to sum this all up for you all very quickly in about 10 minutes. Perfect. We're right on time. Video's about 10 minutes long right now. So what do you guys think? Let me know down below in the comments. We have to see when the dust settles, if the market goes up again. I mean, that's very possible, but as of now, like I said, we ended up closing red. So let me know your thoughts down below. I would love to know. As always, make sure to smash that like button if you all enjoyed the video. Consider subscribing as well, and check out my Patreon if you want to see all my moves, my buys, my sells, call outs, morning update videos, access to me throughout the day, all that good stuff in real time, by the way. That is on Patreon, link down below, or you guys can go to StockSurfest.com/Patreon. And if you guys want 2 stocks from Webull, valued up to $1,600, go to StockSurfest.com/Webull. That's also linked down below. Same with the M1 Finance link for $30 from them, and the $10 Coinbase link. All of those are down below. I'll catch you all later on for the next video today. We'll break down more of more technicals in that video. We'll talk about some stocks I'm looking at as well. So I'll see you all there. Thanks for tuning in again, as always. Keep crushing the market. Stay safe out there. Be a contrarian, go against the grain a little bit. At least that's what I'm doing, guys. I'll see you later on. Thanks again for tuning in. Peace out.